It's been a really difficult decade. The resolution or the key solve that was used to fix what happened after the global financial crisis in 2007, 2008 largely involved reducing interest rates. And so it's been really, really challenging generating income for income beneficiaries. You know, when you think historically, you would have gotten a large proportion of your income generated by fixed interest, which is a defensive part of the portfolio. You know, as we had interest rates get down, you know, to at or below, you know, say 2%, that meant large chunks of your portfolio were only delivering 2% yield. And that's a pretty poor place to start. And then go through that entire COVID period, the rise of the pandemic. And you know, by 2020, the heavy lifting of income production was being done by Australian shares. And the heavy lifting of income production being done by Australian shares was being done by Australian banks. Now, of course, we remember around about May 2020, APRA came out and told Australian banks, you know, as it is their regulator, that they weren't allowed to pay out dividends until the uncertainty of the pandemic had passed. And that left a major hole in income for anyone who is interested in that. And so that was sort of the real low point. Now, obviously in 2022, we saw central banks start to increase interest rates, and that rising tide really is lifting all boats. Now, you know, it's important to recognize that doesn't necessarily, you know, resolve things immediately. There is a lag effect. And there are also, you know, little pockets within structures, you know, due to Australian tax rules and things like that, that prevents some of that flow to come immediately. But the good news is, because the underlying assets are generally providing higher levels of income, as time moves on, those higher levels of income will flow through portfolios and out to beneficiaries. So it's been a challenging time. It's been a condition of the market, but the good news is conditions are changing, and it's unlikely that interest rates will be able to be brought down that low ever again. So the good news is the worst is behind us. As investors, we live in uncertainty. You know, it's nothing new to say that, you know, part of the role of an investor is, you know, in decision making under uncertainty. And so when we're looking across portfolios and the way we're positioned at the moment, I would say we're putting a lot of extra effort into being opportunistic and really looking for assets where we feel that we feel confident that the visibility is quite strong for what the likely outcomes are for those investments, or that that we're being thoroughly rewarded for that risk. And so, you know, across portfolios, we're not seeking to really push the boat out on risk at this point in time, but we're not you know, resting on our laurels and just waiting for things to get better. We recognize that in these, you know, volatile times, there are going to be plenty of opportunities, and it's our job to identify those and include those in portfolios.